Hi guys, in this video we are going to cover two very important RBI notifications which have been issued recently. One relates to the concept of when issued government securities and the trading in these securities, and the next one it relates to the continuation of the interest subvention scheme for the year 2018-19. So these both, they are very important notifications for our examination and they have to be covered in an effective manner so that whenever this question is asked from this particular aspect of RBI notifications, we are able to handle it effectively. So before moving forward, let us quickly take a glance at the relevance of this particular topic for our examination. So for NABARD, this is linked to the ESI portion. With regard to the subtopics, reforms in banking financial sector and current economic and social issues. And with regard to the RBI, this is linked to the finance and management portion, and it can be linked to the subtopics regulators of banks and financial institutions and recent developments in financial sector. So this is the first notification which we are going to cover. Now this relates to the transactions in when issued market in government securities. Now this may sound a bit odd to you and you may not be able to make out the meaning of this particular term as of now, but we are going to cover all the basics associated with this particular notification and what does this notification have to say in this particular video. So you need not worry about it right now. Now these when issued transactions are part of the Reserve Bank directions of 2018 and they have been issued by the Reserve Bank as per the powers which has been conferred on the bank under the section 45W of the RBI Act, and this was necessary in the public interest and to regulate and development the market for government securities in the country. So this is the rationale for bringing out these directions as has been mentioned in the directions itself. So what does this notification say? Now the background of this notification is related to the statement on development and regulatory policies of the Reserve Bank on 6th June 2018. Now this particular statement, it proposed to liberalize the eligible participant base and relax the limits with regard to transactions in when issued market in central government securities. So you need not worry about what does this term mean. You just have to understand what is this notification going to say. So it is just trying to liberalize the market for these government securities. Accordingly, a comprehensive review of the existing guidelines which were there in this regard has been carried out, and these revised directions have been issued as a part of this notification. So these have been issued under section 45W of the RBI Act 1934. This we have seen on the previous slide also. Now these directions, they will come into effect from the date of this particular circular. So this notification is saying that we are bringing some changes in the when issued market in the central government securities, transactions related to those government securities, and these notifications, these changes, they are being made to liberalize the market with regard to these securities. So right now we just have to understand that this notification is being brought with the aim to liberalize the eligible participant base and to relax certain limits with regard to transactions in this particular market. Now let's come to the moot question, which is what are when issued securities? Now when issued securities, they refer to those securities that have been authorized for issuance but have not been actually issued. So there are two important parts of this particular definition, that it is that security that has been authorized for issuance. So we have authorized that we are going to issue this particular government security, but there is a clause that this particular issue has not yet been actually made. So authorization is there but actual issuance is not there. So they are going to come to the market and the authorization has been made for this particular purpose, but they have not yet come to the market, and they are also known by this name, that is when, as, and if issued. So this is another name for these when issued securities. Now trading in these particular securities, it takes place between the time these government security is announced for issuance and the time it is actually issued. So this trading is taking place between this particular time gap between this particular period when you have authorized the issuance and when you have actually issued. So you are utilizing the time between these two events and you are doing trading between these two events. So this is when issued trading. Now the trading and the transactions which happen in these when issued securities, they are to be settled on an if basis, that is they are to be settled if and when the actual security is issued. So only on the actual issuance of security the transactions they are going to be settled. So this is about the settlement of these securities. So this is the bird eye view of the definition of when issued securities. Now these are those government securities which have been authorized for issuance. So their issuance has been authorized, but they have not been actually issued. So actual issuance is not there. However, the trading is taking place between this particular time. So time between these two events is being utilized for the trading, and this is referred to as when issued trading. So this is about the concept of when issued securities. Now from the previous slides we have understood that this trading in when issued securities is in respect of government securities as specified in the RBI directions. Now what do we mean by a government security? Now it is important to understand that for the development of the government securities market and for proper management of these government securities by the Reserve Bank of India, there is a specific piece of legislation or law which has been enacted by the Parliament of India, and this is none other than Government Securities Act 2006. So this is the framework law for the government securities. Now as per the section 2 of this particular law, the government securities are those securities which are issued by a central or a state government for the purpose of raising a public loan or money for public purposes. So this is what the government securities mean. So these are those securities which have been issued by center or state government for the purpose of raising public money. So now let us try to cover some of the other important aspects of this particular notification. So first one is with regard to the eligibility of securities. Now whether all the government securities are eligible. So we have seen the meaning of the government securities on the previous slides, and now we have to make out whether all the securities which fall under the definition of the government securities as per the Act of 2006, whether they all are eligible for when issued transactions. Now this aspect has been answered in this particular notification by the RBI, that the securities which will be eligible for when issued transactions, they are going to be both new as well as reissued government securities which have been issued by central government. So it has been mentioned that the securities which are issued by the central government, and they can be both new securities for which first time issue is being there, and old securities for which a new issue has been made or they are being reissued by the government. So they both are eligible for coverage under these particular directions. Now eligibility of an issue for when issued trades, it would also be indicated in the respective specific auction notification. So when the government issues these securities, government issues an auction notification in this regard, and in the notification itself it will be mentioned that whether these securities they are eligible for when issued transactions or not. Now let's come to the eligible participants. So who are going to be eligible to participate in the trades in when issued securities? Now all entities which are eligible to participate in the primary auction of the central government securities, they will be eligible to participate in the when issued transactions. However, there are some restrictions which are there. Resident individuals, so this is the first category. Second is Hindu undivided families, non-resident Indians, and overseas citizen of India. So these are the four categories of people. They are eligible to undertake only long position in the when issued securities. So they are not allowed to take short position in government securities. Now long position, it means that they tend to buy those securities, and short position means they tend to sell those securities without even actually buying. So it is only concerned with long position in when issued securities with respect to these four categories of people. So this we have to remember. Now let's come to the operational instructions with regard to the transactions in when issued securities. Now when issued transactions, they would commence after the issue of security is notified. So once the issuance of a security is notified, these transactions would continue to take place, and they would come to an end at the close of trading on the date of auction. So on the date of auction, this will come to close. All the when issued transactions for all trade dates shall be contracted for settlement only on the date of issue. So this we have also seen in the previous slides, that they are to be settled only when the actual issue is made. So they will be settled only on the date of issue. Now, what if an entity is unable to deliver the securities it has sold on a when issued basis to the buyer on the date of issue? So, what if there is an entity, it has gone short on when issued when issued government securities? So it means that without even buying those securities, it has entered into a contract to sell those securities. So what if that particular entity it fails to honor its obligations? Then this particular transaction, it will be settled as per the default settlement mechanism of this particular organization, which is Clearing Corporation of India Limited. So in case of default, the settlement mechanism will be as per the Clearing Corporation of India Limited. Now, what if the auction is cancelled? Now, in the event of cancellation of the auction, for whatever reasons, all the transactions or the trades in the when issued securities, they are going to be deemed null and void ab initio. So this is very important, that in case of cancellation of the auctions, all the trades, they are going to be null, they are going to be cancelled, they are going to be assumed cancelled from the very beginning. It will be assumed that that particular issue, it was not even announced. So these are the operational directions or instructions with regard to when issued securities. Now let's take a look at the transaction limits with regard to trading in when issued securities. Now the open position limits in the when issued market, it shall be as follows. So there are going to be two categories of participants, and they are going to have different criteria with regard to long and short positions in when issued securities. Now for primary dealers and scheduled commercial banks, the long position can be up to 25% of the amount notified in the auction. Long position means buying those securities. Going long means that you are bullish that the price may rise and I have to buy. And for other eligible entities, this long position again can be up to 25% of the notified amount in the auction. So very clearly it is mentioned that 25% is the limit with regard to both these categories with regard to taking long positions in the when issued government securities. However, the situation is a bit different in the case of taking a short position. Now when you take a short position, it means that you are selling the securities without even buying them. You feel that the price of the securities, that they are going to come down. So if the price is going to come down, you feel that I should sell those securities now, and I will buy just before the transaction is to occur, just before the settlement is to happen. I will buy briefly short of this particular period, and I will honor the transaction, and that particular buying will happen at a lower price because I feel that the price is going to decline in the future. So for going on short, so for short limits, the positions with regard to the two categories, that is primary dealers and scheduled commercial banks and other eligible entities, it is a bit different. Now for primary dealers and scheduled commercial banks, they can take up to 25% of the notified amount in the auction. They can take short position up to this particular amount. However, other eligible entities, they can only take the short position up to 10% of the notified amount. However, there is another restriction, that individuals, HUFs, NRIs and overseas citizens of India, they are not allowed to take short position in the when issued market. So this is another very important criteria, that these particular categories of people, they are not allowed to take short positions in the when issued market. This we have also seen on the previous slide also. Now all the when issued transactions, they are going to be undertaken only on this particular platform. So this platform is negotiated dealing system order matching platform. So this is a separate platform which is there for when issued transactions. So we have to remember that all these transactions, they are going to be happening on this particular system. Now this system is a screen based electronic anonymous order matching system for trading in the government securities. So all the transactions in when issued securities, they are going to happen on this particular system. So this is all about the first notification. Now let's come to the second notification, which relates to continuation of interest subvention scheme for short-term crop loans on interim basis during the year 2018-19. Now this is a very short and very brief notification, and this only specifies that we are going to continue the interest subvention scheme for short-term crop loans, and most of the criteria with regard to the continuance is going to be same as the criteria we followed in the previous year. So this is the brief crux of this particular notification. So this was issued on June 7th, 2018, and it becomes very important for our examination. So let us understand what are the different aspects of this particular notification. So first and foremost, we must be aware about what is interest subvention scheme. Now, interest subvention scheme, it was launched by the government to attain high levels of production and productivity in the agriculture sector by providing money, loans or credit to the farmers at a very concessional rate of interest. So we have to make sure that the agriculture sector in the country, it keeps on growing, and to ensure this, we are providing finance to the farmers at a lower rate of interest. So this is interest subvention scheme. Now under this interest subvention scheme, interest subvention is provided to the financial institutions, that is NABARD, regional rural banks, cooperative banks, public sector banks, as well as private banks. So all the financial institutions, they are provided assistance so that they are able to provide short-term credit to farmers at subsidized rates of interest. So ultimately, these institutions, they are providing the short-term credit to the farmers at subsidized rate of interest, and they are being reimbursed by the government in this particular regard. Now the government has earmarked rupees 15,000 crores for the year 2018-19 towards interest subvention for short-term crop loans. So this is the amount which has been earmarked with regard to interest subvention for the year 2018-19. So this becomes important for us, as a straightforward question can be asked on this aspect. Now as per the interest subvention scheme, farmers can avail short-term crop loans of up to rupees 3 lakh at subsidized interest rate of 7%. So if the farmers, they have to get an loan up to rupees 3 lakh for short-term crops, they can get it at a subsidized interest rate which is only 7%. And then again, if the farmers, they make prompt repayment of the loans, the interest rate will come down to just 4%. So there is an additional concession for prompt repayment, and in this particular case, the effective interest rate is only going to be 4%. So this is about the interest subvention scheme. Now let's take a look at what does this notification has to say. Now in the circular relating to interest subvention scheme for the short-term crop loans 2017-18, the continuation and implementation for the interest subvention scheme for the year 2017 had been advised. So first, the notification is creating a background that in the previous year when we issued the circular, we made it clear that we are going to implement this interest subvention scheme for 2017-18. And now coming to the year 2018-19, it says that the Ministry of Agriculture and Farmers Welfare, it has informed that they have initiated the process for continuing this interest subvention scheme for the year 2018-19 as well. So first and foremost, it is only making it clear that this interest subvention scheme, it is going to be continuing in the year 2018-19 as well, as has been informed by the Ministry of Agriculture and Farmers Welfare. Now as an interim measure, this scheme will be implemented in 2018-19 on the terms and conditions which were approved for the scheme for 2017-18. So it says that right now we are not going into much detail or nitty-gritties of this particular scheme. We are just providing that this particular scheme has to be continued, and the terms and conditions, they would remain same as they were for the previous year. So this is very simple. Now this particular notification, it is not a very detailed notification. It simply mentions that we have to follow the similar terms and conditions as we followed last year for the interest subvention scheme. However, it provides some basic direction. It points out to some important aspects that we have to follow, or we have to follow with time with respect to interest subvention scheme 2018-19. So right now these are not at all not very much clear, but still there is this direction that has been put in the interest subvention scheme 2018-19, and we have to take a look at the same. So the notification says that from 2018-19, the effort is to put this particular interest subvention scheme on a direct benefit transfer mode. So we are going to make effort to ensure that the benefits of this interest subvention scheme, they are directly transferred to the beneficiaries. And further it says that all the loans which are processed in 2018-19, they are required to be brought on a specific interest subvention scheme portal or direct benefit transfer platform once this portal is launched. So this direction, this particular aspect of the notification is still in its inception phase, and once the directions they are clear, we are going to have more clarity with regard to this aspect. Further, it says that the government of India, it has earlier specified that we are going to do away with the plan non-plan categorizations of scheme. So for this particular scheme also, this is going to be dispensed with, this is going to be done away with, and the interest subvention scheme, it is going to be implemented, or it is going to be settled in category wise, that is for scheduled caste, scheduled tribes and northeastern region. So we are going to make category wise details with regard to the beneficiaries of the schemes, and these categories are going to be scheduled caste, scheduled tribe and northeastern region. Now in this regard, the notification further tries to make out the responsibility of banks. So it says that banks have to capture category wise data while they are providing loans under this interest subvention scheme. So they have to make sure that the data is available according to the following categories: general, scheduled caste, scheduled tribes, northeastern region, and further in northeastern region we have to provide general, scheduled caste and scheduled tribes. So this is going to be the classification or category wise list of beneficiaries which are to be captured by the bank. This is because some separate allocations have been made by the appropriate ministry in this regard, and separate funds are to be allocated for scheduled caste, scheduled tribes and northeastern region. So it is essential that we understand that whether we have met those targets, and the funds they are going to be dispersed as per those targets. So banks have to capture category wise data, and the same has to be reported on the ISS or interest subvention scheme portal once it is fully launched, and till such time the DBT portal it becomes functional, banks are requested to submit their claims category wise as indicated above. So it says that once that particular portal it becomes operational, then we will be able to capture individual farmer wise details to settle the claims on direct benefit transfer basis. However, till that particular portal is launched, the banks have to make sure that they collect the details with regard to each category, so that we are able to provide the benefits which we have decided for each of the category. So this is all about the second notification which relates to interest subvention scheme for the year 2018-19. This was very simple and very easy. So now we are clear with the two notifications, two very important RBI notifications which have been issued recently. Now let's take a look at some of the important MCQs which can be framed out of these notifications for our examination. So let's start with the first question. Statement on development and regulatory policies is brought out by. Options are Securities and Exchange Board of India, Reserve Bank of India, Insurance Regulatory and Development Authority, or none of the above. So in the first notification we learned that this notification had its genesis to this particular statement, that is Statement on Developmental and Regulatory Policies, which was brought out by Reserve Bank of India or RBI. So answer to this will be option number B. Next question. Which of the following correctly describes when issued securities? So we have seen that our first notification was based on this particular concept of when issued securities. Options are securities authorized for issuance and actually issued, securities authorized for issuance but not actually issued, securities not authorized for issuance but actually issued, or none of the above. So we have understood this concept of when issued securities, that these securities they refer to those which have been authorized for issuance but they have not been actually issued yet. So answer to this will be option number B. Next question. Which of the following is correct regarding trading in when issued government securities? So this is again on the first notification. Trading takes place when between the time a government security is announced for issuance and the time it is actually issued. All when issued transactions are on an if basis, that is they are to be settled if and when the actual security is issued. Both of the above or none of the above. So in this particular case we have seen that both these statements with regard to the trading in when issued government securities are correct. So answer to this will be option number C, both of the above. Next question. Which of the following is correct with regard to the eligibility of a government securities for when issued transactions? Options are eligible securities shall include only new and not reissued government securities of the central government. Eligibility of an issue for when issue trades would be indicated in the respective specific auction notification, both of the above or none of the above. So in this particular case, we have seen that with regard to the eligibility of the government securities, both the new as well as reissued securities are going to be eligible. So first statement is not correct. However, the second statement which mentions that in the notification which is issued, it will be mentioned that whether this particular security is qualifying for when issue trade or not. So this one is correct. So answer to this question, it will be option number B. Next question. Who among the following are permitted to take short positions in when issued securities as per the recent RBI notification on transactions in when issued government securities? Options are resident individuals, non-resident Indians, overseas citizens of India, or none of the above. So this we have seen that all these categories, they are not allowed to take short positions. They can only take long positions. So here answer would be option number D, none of the above. Next question. As per the recent RBI notification on transactions in when issued government securities, which of the following would happen in the event of cancellation of auction of such securities? So what if the auction which is planned, it is cancelled? What will happen? Options are all when issued trades will be deemed null and void ab initio. All when issued trades will be settled on cash basis. All when issued trades will be automatically transferred to next auction in government securities, or none of the above is correct. So in this particular case, we have seen that when that particular auction is cancelled, when that event is cancelled, then all the when issued trades, they shall be deemed null and void ab initio. They shall be remained cancelled. So here the answer would be option number A. Next question. So this one is on the second notification. How much amount has been earmarked by the government towards interest subvention for 2018-19 for short-term crop loans? So this is a straightforward factual question. Options are rupees 1000 crores, rupees 15,000 crores, rupees 50,000 crores, or none of the above. So this we have to remember that the amount which has been earmarked by the government for 2018-19 for interest subvention for short-term crop loans, it is rupees 15,000 crores. So answer to this will be option number B. Next question. As per interest subvention scheme 2018-19, farmers can avail of short-term crop loans of up to rupees dash at a subsidized interest rate of 7%. So this is with regard to the qualifying amount for availing the benefits of this interest subvention scheme for the year 2018-19. Options are rupees 3 lakh, rupees 5 lakh, rupees 7 lakh, or none of the above. So this we have seen that this qualifying amount is rupees 3 lakh. So for loans up to rupees 3 lakh, you can get a subsidized interest rate of 7%. So answer would be option number A. So these are the answers. So guys, this was all about the two recent RBI notification, one with regard to the transactions in when issued government securities and the other one relating to interest subvention scheme for the year 2018-19. Thank you.